Good afternoon and welcome to BizTech's Asian Midday Market Watch. As usual, our Thursday guest on the 7th of December is David Kuo, founder of The Smart Investor, coming to us out of Singapore. David, as always, lovely to have you on the show.
Yeah, Salamat Hari, Brian. I see you got the email about matching clothes, yeah, today? Black jacket and blue shirt.
People would think that we were sponsored by a wardrobe company or something. I should be working on that, actually. But David, before I get your insights, let's go and take a look and see how markets across the region have performed in the first half of the day. We're going to start with cryptocurrencies, of course, which have run up a lot. Bitcoin is at 44,033. It's up 0.65%. Ether is at 2,264, down 0.64%. Now, looking across to regional stock markets, we start where you're at. The Straits Times Index is down 0.9%. And then we have the KLCI, which is down 0.24%. Shanghai is down 0.18%. The ASX All Ordinaries is down 0.24%. The Nikkei is down 1.78%. The Hang Seng is also down significantly, 1.25%. But breaking the sea of red is the Kospi, which is up 0.12%. David, your views on market performance in the first half of the day?
I think it's really everything to do with America, because America was down. People are a little bit worried about the froth that was being built up about possible rate cuts. And I think the economic data that we are getting from America is a pretty mixed bag. And all those people who are hoping that we would be seeing some interest rate cuts next year are probably recalculating at the moment and saying, okay, let's just wait until tomorrow when we actually get the non-farm payroll data coming out from America, and let's just see how good or how bad those numbers are. So everything is data dependent. I know the interest rate should be data dependent, but it seems as though people think the market should be data dependent as well. And they're going from one day to the next, thinking, what should we do now? Are interest rates finally peaking, or are interest rates going to stay on hold for a while? So it's no surprise. We'll probably be little bit clearer tomorrow when those non-farm payroll data comes out.
Now, speaking of data, China's November exports beat expectations and its trade surplus widened. Now, this is data just come out this morning, but we also have to look at this in the context of how everyone else looks at the data. Moody's has cut China's credit outlook to negative. What is this impact? What impact is this going to have on investors' minds?
I think, it's pretty much what we would expect. I don't think Moody's is telling us anything particularly striking.
That we didn't know before.
Well, exactly. Well, what Moody's is saying is that, China's economy is in a bit of a mess at the moment. And there's likely to be more bailouts for local governments. There's going to be more bailouts for some state-owned enterprises. And as a result of that, they're saying that economic growth could slow. I mean, we saw those in the trade data today. Imports are lower. Why? Because Chinese consumers are not out there spending money. And I think this poses a problem. I mean, China said it was disappointed with Moody's outlook for economic growth in China. Having said that, the two other big rating agencies, Standard & Poor's and Fitch, have maintained their outlook for China, saying that it should be stable. But I think most of us know that China is going through some kind of issues at the moment, particularly with the housing market. I mean, the housing sector, the construction sector, accounts for about a quarter of China's GDP. And if the construction sector is not healthy, it puts a lot of strain on the rest of the economy to try and pull through. Then we also have the problems that China is having with the rest of the world. And so that's another leg of the China growth story, or the China economy. So if housing is not doing well and exports are not doing particularly well either, I mean, part of the reason why the trade data was as strong as it was because imports was actually less, which is something that you don't particularly want to see in China. So Moody's is not telling us anything special, but I think we'll just have to wait and see and just let China work through its problems slowly.
Now, on maybe a little bit more light-hearted note, let's swing on to McDonald's, which is about to test something called Cosmax across the impact being on McDonald's top line and bottom line.
Right. Okay. I don't think it's going to have any impact on McDonald's top or bottom line, but I think what it is going to actually sort of indicate is that McDonald's is trying new formats. I mean, we all know about the McDonald's, the restaurants that we go to, and we order our burgers, and we sit down and we have our meal. But I mean, this one is actually faster moving than even McDonald's itself. I mean, you would have thought that McDonald's was already fast food, but this is even faster than that. And these are sort of smaller outlets, and they're test marketing about 10 of these outlets. The first one is going to be in Illinois, and they're going to see if this format actually sort of appeals to people who don't really want to spend a lot of time in a restaurant, and all they want to do is to order, take it away, and then go somewhere else. So it's going to be interesting. I don't think McDonald's has been that successful with different formats other than the original one, where you simply have a restaurant format. Sure, you know, they changed some things where you can actually order from machines rather than to go up to the counter, and that has sort of speeded up the process slightly. But it'll be interesting. But what I think it seems to suggest is that these formats will be a lot smaller. And is this the way things are going to go? Is McDonald's finding out that its real estate is getting more expensive to operate now, and they actually want smaller store formats rather than the big formats that they've had in the past? Maybe this is a sign of the times. It's a bit like a lot of the supermarkets in the UK that are operating these very, very small formats with a limited amount of stock in them, and people just dive in, go and pick up what they want, and you won't have the full suite of things, but you will just have some of the essentials. Maybe this is the way the world is going, Brian.
And David, I've got to look at this again, even from a Southeast Asian lens as opposed to a US-centric lens. If you look at the proliferation of, say, bubble tea outlets, they all many of them are all small format stores. You look at some of the new coffee chains, they're all small format stores. So and then even if you look at some of the grocery chains that have done very well, it's smaller format stores. So I think perhaps McDonald's is looking at global trends and saying, aha, I think we're going towards smaller formats. It's also cheaper for us to set up and franchise. Maybe that's the opportunity there. And that could be a potential huge new growth opportunity for McDonald's internationally.
I think you've hit the nail on the head. I mean, just have a look at the 7-Eleven format that you have all around the world now. I mean, in Malaysia, 7-Eleven is a listed company, I believe. And then over in Hong Kong, the 7-Eleven stores are operated through Jardine Matheson or through Dairy Farm International. So DFI International. So what you have is that this move towards a small format store. And I have to say that I have a 7-Eleven pretty close to me over here. And it seems that whatever time of day you go in there, there's a queue of people just sort of buying small snacks and things. I mean, they're not going to do their main supermarket shop in there, obviously, but it is a format that seems to work, and maybe that is the way. Bubble tea is a really good example. I mean, the queues for bubble tea is ridiculous sometimes, where people are just milling around waiting for their bubble tea to be made. Very interesting.
Yep, absolutely. And again, perhaps new growth opportunities. Maybe time to, if this experiment is successful, time to relook at McDonald's as an investable stock. On that note, David, thank you very much for your insights. Thanks for coming on this show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.